the webinar. Just give people a moment to get on, and then we will get started. All right, a few more people. Welcome. Good morning. Thanks for joining us today. We are going to get started. Just a couple seconds. Just giving people a chance to enter. Everyone with the webinars running the room the last minute. So hold on one second. Good morning. Good morning. A few more people. Good morning. So we're going to get started. Thanks for joining us today. So as you've been hearing me say time and time again, this year MSIC's focus is on the future of the movement. And so we are bringing to you speakers and topics that are relevant to the rapidly evolving financial landscape and both the challenges and opportunities for credit unions to navigate. We know that the success of credit unions really depends on our ability to leverage technology, enhance member experience, and maintain our focus on community and cooperative principles. So today I want to welcome Jeff Rendel. He's president of Rising Above Enterprises, who is here today to speak to us about the 20 trends that will shape your credit union's future. During this webinar, Jeff is going to speak to how to act upon emerging trends, developing strategies to integrate new technologies, redefine your member engagement approach, and innovate your offerings to meet future demands. A little bit about Jeff. He really knows the financial services marketplace. He has experience as a federal banking regulator, a financial services executive, and a congressional lobbyist. He understands the balancing act of safety, soundness, sales, and strategy. He regularly works with financial service providers that want elite and entrepreneurial results in sales, service, and strategy. And each year he addresses and facilitates for nearly 100 financial institutions and their business partners. So we're really happy to have Jeff here with us today. I've reviewed his webinar, his presentation. It's excellent. I know you're going to get a lot out of it. As for today's format, as we usually do, we have time set aside for a Q&A at the end of the session. So feel free to keep your questions, or you can send them in the chat during the presentation, and we will get to them once he concludes. And then during the Q&A, you can raise your hand at that time also, and I'm happy to unmute you so you can speak to Jeff directly. And with that, Jeff, welcome. Thank you for being here, and I will hand it over to you.
That's great, Erica. Thanks for the warm introduction. I was thinking in the past, I've spent a number of years, gosh, now decades, working with credit unions. I can go all the way back to when it was just the Massachusetts Credit Union League and some of your meetings there before you became the Cooperative Credit Union Association. But nevertheless, I've spent a lot of time with not just your credit unions, but other credit unions around the land, and the globe to some extent. So that's enough about me. The rest of the time is all about you. Please feel free to engage in the chat or hang around toward the tail end if any questions pop up. Of course, you're more than welcome to get in touch with me directly or through Erica if some questions come up a little bit later for some further deep dives. Glad to entertain that and appreciate the thoughtfulness. Okay, we got 20 trends. Sometimes these things turn into 20 plus trends that will shape your credit union's future. And much of this is with regard to the work that I do in the industry and working at a strategic level, at a service and leadership scope too. But I thought I'd break this up into about 4 main areas, along with some supplemental material that I'll share with you throughout our time together. The retail customer or consumer experience there, what's going on in financial services as a whole. We'll get a little bit more focused on particular trends, mainly with regard to the member experience with U.S. credit unions, and thought I would share with you 5 specific sets of strategic actions that I've noticed around the industry that address a lot of these trends here. So we've got about 15 major trends and then about 5 strategic action-oriented trends that we'll cover through. So let's dive right in and take a look at what's been going on with regard to the retail customer or consumer experience trend. In fact, as I move through these slides, one exercise I would encourage you and your team to take on every 6 months or so is just do a deep dive into how consumers are interacting with retail focused businesses, because our members, our consumers and what they experience out there, gosh, at businesses such as Amazon or Dunkin' and everything in between, that's what they're beginning to see, expect, experience in the retail side there. We're in the retail business too, so the more we learn about what's going on in that segment of the industry, the better we can customize our offerings and experience for members. So let's dig in here. We've got hyper personalized shopping here. I won't go into detail on all of these, maybe just kind of summarize them and share some examples at work in the industry. Predictive analytics, tailored marketing campaigns based on behaviors. And this is very interesting because it really rolls us into this personalized shopping experience. If you think of Amazon for the banking industry or the banking experience, it's probably a good way to think about it. But the tailored marketing campaign by the use of data that you have about your members. Now, maybe it's demographic data that you have in your MCIF or your CRM systems, or perhaps it's data that you glean from the various payments services that you offer and some of the information that comes from their transaction flows. I was with a kind of a guru in our industry, Lamont Black is his name, a couple of weeks ago. We were talking about the idea of targeted marketing campaigns, and he really pushed back on this idea of target marketing kind of moving away into the background and now being focused on individualized marketing based on data that we have and data that we can procure about our members, their demographics, their life stages, their payments history that allow us to make a particular message of marketing or awareness to that one member and a second message to a completely different member in a unique fashion. So hyper-personalized shopping being something that's working its way into the retail experience. You move forward, and part of this hyper-personalized shopping experience here is because of the role of AI and some of the enhancements that come with artificial intelligence and machine learning. Now, I can promise you right now, the robots are not taking over, but it is interesting to see how AI is already used quite a bit in the credit union industry, whether it's through for fraud protection, through payments, maybe bots that are inside your insurance verification systems, perhaps even virtual assistants and chat bots that are built into your call centers there. And one of the interesting dynamics about AI bots and contact centers, obviously they learn as they go and they get better, and they're really quite honestly used frequently for frequently asked questions that may come from your members. The interesting dynamic, if you do choose to go down this route here, is your members want a quick escape hatch. If for some reason the bot, the FAQs, just all that's built in to that machine learning isn't able to answer that question thoroughly, or it may be a more intricate or intimate situation that member just needs to sound it out with an individual who is well sourced, who's well versed, and can understand the dynamics of just what a machine can't. So I think the lesson that comes from a lot of this AI enhanced interactions is when your members do need to have that escape hatch there, can they press one and catch a member service representative all of a sudden, or right then and there? That's the good lesson that comes from technology and using that to A, enhance the member experience, but B, make sure we can dig a little bit more deeply with our members if they do need to get out and chat with a live individual. Another interesting dynamic that's happening in retail experiences or consumer experiences is eco-conscious consumers. Now, I would imagine many of you have auto loans that are financing e-vehicles. Maybe it's a Tesla, maybe it's a Prius or a hybrid or something in between there. And we see a lot of that obviously going on in the industry and in the economy itself. And to some extent, consumers are willing to pay a premium for that product and potentially that service. So you might finance a lot of e-vehicles in the Northeast there. I live in Southern California. We see a lot of credit unions that are financing solar panels as an example. So we certainly see this rise in a way to help finance that important element of their life stage. But I'll pull it to another element here, and it's this idea about preference for brands with a clear sustainability, not just to the economy, not just to the environment, but I'll open it up a little bit more to the local community. And maybe these types of products and services don't fit what you offer your members. Respect that, because we all have different business models. What members do want to see, what the consumers are really wanting to understand about you is, are you a locally owned and sourced financial institution? The more that you can build that into your marketing messages, it resonates. I realize you've got lots of competitors in your necks of the woods, some of them credit unions, some of them banks. Some of the banks may not even be owned in your neck of the woods, in your communities there, yet they are active in that marketplace. The more that you can build in the fact that you are a locally owned, controlled, and led organization there, that resonates with members, especially on this local conscious consumer side there. Moving along, I thought you might know it's clearly obvious that convenience is the standard. And boy, all we really need to understand is that image that you see on the right-hand side of the screen. And can your members accomplish just about, if not everything, on their phones? Two examples come to mind. Obviously, you see some descriptive elements with mobile apps that are enabling kind of one-tap transactions, adoption rates of auto replenishment or subscription-based services. In fact, I'm starting to see a lot of checking accounts or debit accounts in credit unions that are bundled as a subscription service. So it certainly might carry the day-to-day transactional flow of your checking business there, but as a subscription side, it also might have attached to that checking account cell phone insurance. I've seen pet insurance, identity insurance. So it really follows in with this trend that you see, making it more streamlined for your members. But a good question that I ask of credit union boards and executive teams all of the time is, what's the degree that your members can accomplish just about everything via the app? I'm case positive here. I have not been in my credit union's branch since 2012, believe it or not. It's 12 plus years. And it's because they've committed to the mobile experience. It makes it easier, more convenient for me as a busy traveler, but quite honestly, I think it's just a busy consumer. We all do appreciate the ability to do business on our terms. But another interesting dynamic is I was down in the panhandle of Florida just a few months ago with Tyndall Federal Credit Union, so Tyndall Air Force Base. They learned that 84% of their members want 100% of their experience with the credit union via the app. And that was proof positive enough to continue to invest in that experience. But even as transient as that membership base might be, an Air Force population, I don't think the typical Air Force cadet or air person is any different than a consumer that we are serving in the northeastern part of the US or out here in the West or anywhere in between there. Consumers are consumers, and trends really point to all of us. Last couple of ones that I'll share with you with regard to some of the emerging trends in the retail space there. Interactive and experiential retail. Now, some big picture items you can see here, and I'll bring it back to the practical side. Retailers are investing in things like augmented reality, virtual reality, workshops that foster stronger brand connections where you can go into a store or via the app and learn more about the transaction or the business you're looking to engage with, and actually integrate that with your social media and find out what you're also interested in through your social feeds to really make that experience, that learning experience, a lot more customized for what you need. I think in the practical sense, this pulls us back to financial education for our members. And with regard to all of the technology you see listed on the screen here, I think the practical application is, can your members develop a deeper understanding of their personal finances through the app? Or online at least. And lots of partners that we can use in the credit union space that allows that to happen. But you think about the continued movement toward technology and members wanting to learn, want to watch, maybe play games to help their savings goals move forward. That's all part of this larger trend of kind of interactive and experiential retail. And what you're doing is you're planting seeds. One, as you educate your members, they're getting wiser with regard to finances, and that develops a level of trust that allows them to think, gosh, I've learned so much about my own ability to save for a mortgage from this credit union. I need to check them out when it comes time for application. And I think the application from that is how easy it is for them to begin, to continue, and maybe even close that process via technology. So some great trends to think about. I think it really helps us understand the consumer mindset and experience a lot better and start to look at how this fits into what we deliver with our own members strategically. We shift gears here for a moment here and talk a little bit about financial services trends. So we start to look at the banking industry as a whole, closely related to what we just discussed with regard to kind of convenience as key. I think the good lesson from this is we don't have to do it all on our own. That's sometimes one of the challenges that I hear from credit unions is lots of good products, services, technologies, experiences are out there, but we can only pick and choose to what to do in terms of successful strategic execution, but also our resources might be limited as what we can do in a standalone types of capacity. The lesson from this is we start to look toward other credit unions, the credit union industry, QSOs that exist that allow us to take advantage of the types of technologies that are out there, whether it be through a QSO or through a fintech, and bring that expertise into our credit union members' experience. And you can see integration of financial services. Non-financial companies are clearly getting into our lines of work, and even streamlined lending and payments are beginning to compete with what we offer. I was in Canada just about 6 months ago working with a credit union. They partnered with a fintech, and I would imagine many of you on the webinar here have partnered with some fintechs in the past too, if not here in the near present. What they learned is that the fintech companies that they were working with had an unbelievably sophisticated level of technology that consumers and their members would and are loving. The challenge was they didn't have a very loyal set of customers. And so here's a credit union that has a very loyal set of members, yet perhaps not the expertise or the standalone resources to build and maintain and just continue to upgrade this technology. And what came from the discussion is, why don't we get married? Why don't we, find you as a fintech and your expertise? You want very loyal members. We have loyal members who want great Amazon-like types of technologies. Let's find a way to work together. And that's really, I think, what comes from this is there are partners in our space that allow us to connect and to compete with some of the larger players that are out there in financial services. I think on a practical side, we look to frictionless payments as a growing trend in financial services here, biometric authentication for payments, moving beyond even multi-factor authentication that I know many of you in your online and mobile platforms utilize quite a bit. The proliferation of digital wallets to simplify the payments experience. Now, here's an interesting story. Was just in a credit union a couple of weeks ago that obviously has instant issuance for their debit cards and to some extent their credit cards that they print literally right next to the member services station. But what was even more interesting is the digital debit card was literally pushed to that new member's digital wallet on their iPhone, in this case, in a matter of seconds there, yet it took a matter of moments, which can sometimes feel forever, minutes versus seconds, for that physical card to be printed. And it was sort of interesting to listen to the new member kind of wondering, holding that card, what do I do with this thing when I've got it already built into my phone? So I think a good strategic lesson to start thinking about is, are you migrating to more digital wallets, especially at account opening, that allow your members to go to use or go to work right away with their phones and go about their day-to-day commerce activities there. Lastly, there we've got invisible payments, wearables, things of that nature. I think some of this gets very large with respect to what we are looking to accomplish at credit unions. My number one recommendation you consider would be enhanced security and perhaps looking more toward pushing your debit and credit relationships immediately to the digital wallet for just ease of use and relevance for your members. My wife is from Wales, and it's always interesting as we talk about payments. And she always used to say 20 plus years ago, I don't know why the Americans don't have chip cards yet. Chip cards were all the rage in Europe there. And honestly, it's with respect to merchants and their willingness and ability to accept them. But as you look at the future of payments, don't hesitate to look across the pond physically and figuratively, and just ask what's going on in those areas of the economy that those consumers are utilizing. And you'll start to see things like digital wallets and biometrics taking hold, which is a good predictor of what's going to happen next here in the States. Frictionless payments as a trend that's going on in the financial services sector here. This is right down the alley of what credit unions do day after day after day, and that is financial wellness as a service. What I love most about credit unions and cooperatives in general is that one of those 7 cooperative principles is member education. Whether you're an electrical cooperative or a financial cooperative, it's built in to the 7 principles that we have as cooperatives there. So we can take this and add technology, which helps us build tools for automated savings and games and tracking progress and making it fun to save your first $500, making it really fun to save that 5% down payment for the home loan, whatever it might be. You can track that in a progress bar that just engages your member in a way that's a lot different than keeping track of something on their own through an Excel spreadsheet. Now, we don't have to do it all on our own. There are plenty of apps and partnerships out there in the credit union space that, quite honestly, add a lot more cool features and fun for the member experience that makes it even more relevant for our members. And that frees us up. You think about this highest and best use of capital type of argument. When we partner with others who do what we'd like to do, but do it a whole lot better, let's partner. And that frees our time up for deeper member relationships or expanded offerings, or maybe looking at new lines of business that remove the transactional and maintenance aspect away from our day-to-day operations and allow us to think, act, and even execute a lot more strategically. However, from time to time, like we chatted about earlier with chat bots and contact centers, personalized coaching via live member service representatives is very important. I have a 20-year-old daughter. A couple of months ago, she wrote a piece of content for our business. I was looking to kind of get inside the mind of a 20-year-old when it comes to financial services. And one of the points that she made is, while technology and smaller branches and the ability to kind of see you around town is important there, when I do need to chat with someone, in her words, I don't want to press one for frustration. That's exactly how she phrased it there. And I loved it because it really showcases the faster we can exit that automation and get to a live, personalized coach who knows a whole lot more about financial services than perhaps the average consumer might. We build that relationship, we create that trust. And as a result of that, as a byproduct of that relationship, that investment in trust, we at least get a fair shake in securing or deepening the relationship that the member is looking to. So keep that in mind. I mean, it is really built into what we have done as credit unions for years and years and years, and that doesn't change. I love this as just an awesome, non-negotiable and continuing aspect of what we do, and help our members get wiser, smarter about their finances, and kind of grow along with the credit union. With regard to technology, internal and external, yes, risk management, strengthening your defenses against phishing. What's the latest one I've found out? Quishing, Q-U-I-S-H. Those are fraudulent QR codes. I think we're all in the business now of, gosh, checking into a hotel, and rather than seeing the About Us portfolio there, or the room service menu, you've got a picture of a QR code right there by the TV remote control to engage in all that used to be a printed form or a printed folder right there in your hotel room. It's those types of ideas that we're asking the question, what are the bad guys looking to do next to introduce fraud and fraudulent circumstances potentially to our members? Yes, but also internally looking to get into those systems. So we've got a couple of tools that we can utilize on the member service side. It's continuing education. Don't click on those emails. We will never call you. Call us immediately back if it sounds like it's something that wouldn't normally be occurring there. Those are just good member education tools that allow them to take that extra step to reach back out to the credit union to make sure that the contact was legitimate. In case in point, I just received an email I thought was from American Express just yesterday, but a typical email that I never get from them. Obviously, as you looked a little more deeply, you could see that it was a fraudulent type of message. I just called American Express to make sure that this was not a legitimate email, and sure enough, it was not. But we go to the other side from the internal development, and we discuss the importance of not clicking on links there, great testing or deep testing to make certain that our systems are locked down, because you've seen in the last year or so a number of different circumstances where ideas like, or instances like ransomware have worked their way into the credit union industry that in one case took a credit union and the bulk of its operations down for a good couple of solid weeks there. And obviously that's problematic for operations and the member experience, in addition to what's happening internally. So the lesson that comes from this, especially for some of you who might serve on boards of directors or CEOs of your credit unions, probably a greater level of investment in maintaining and just augmenting the security profiles internally and externally for your members and their data. As we move along these kind of final ones, I think I've got one more left here. Yes, on U.S. financial services trends. we look at partnership-driven innovation. And much of this comes back with working with QSOs, working with other credit unions, working with fintechs to really bring to our members what they see elsewhere. I was in Minnesota last week and walking through that Mall of America, and I saw some great technological tools that are brought in by, if it wasn't Capital One, it was Chase. I can't remember exactly which one it was, but I wonder how many members walk past that and just assume that all institutions are going to be like that. And, it is what it is. Here's the opportunity we have to look for partners in the industry. And again, that partner could be another physical credit union or a group of credit unions, or maybe a QSO there that allows us to deliver that type of technology, that type of experience, that coolness that members are seeing out there in their retail experience, but we just don't have to do it on our own. I love the fact that we've got several credit union, I should say several ATM networks that our credit unions are a part of that allow our members to have access sometimes up to 100,000 ATMs around the industry, definitely 50,000 if you work with companies like Valera there. And what's great about that, and please market it if you're not already, Wells Fargo owns 7,500 proprietary ATMs. That's the number. But we as credit unions, your credit union, regardless of your shape or size or field of membership, if you're a partner in one of these ATM networks, you've got more ATMs around the nation than Wells Fargo will give its customers. And my question to you is, do your members know? Is that on your landing page? Is it a prominent feature on the app where they can go right to the map and find, in a geo-fenced type of fashion, the closest ATM to them to give you that leg up with respect to partnership-driven innovation? So good trends that are happening, and hopefully some practical examples that I've shared from credit unions that are acting on these trends. Let's dig a little bit more deeply and go into credit union trends. So we've spent some time on consumers. Now we shifted gears and talked about financial services as a whole. Now let's move into credit unions itself. Many of you are probably experiencing some of these opportunities, maybe even some of these challenges with your membership development. Number one is a generational shift in membership. Younger members love mobile. Generation Z and millennials, while they're going to the branches, they're not as going to the branches as much. That does not mean, that the branch is not going away. It's just changing in its shape, in its importance, in its size, and maybe even in its role. And I tend to see the branch now being less of a transactional item and more of a relationship development. If we've invested heavily in the app, I can move money from left to right figuratively through the app and send wires and pay bills, and even pay people through P2P applications there. But every now and again, I need to stop by the branch or maybe reach out via the contact center and have that conversation about a mortgage or a business loan or just some dynamic I just can't put on a loan application itself. And that's where the shifting role of the branch is becoming more and more prevalent, is relationships over transactions there. And it's interesting, like I just said, the branch isn't going away. It's more and more of a marketing tool in some cases there. And as you look at these examples here, these elements here, I can think of a credit union in El Paso, Texas that, oh gosh, they deployed, I'm going to say half a dozen to 10 brand new stores was the term that they utilized. Very small. I think they were about 600 or 700 square feet in general there. What they found is that certainly members wanted to stop by for that deeper conversation, but it worked more as a marketing tool and as a sign of a commitment to the greater El Paso marketplace. Because here you were with a physical presence with 2 or 3 people that were housed, which meant that 2 or 3 people were employed there, paid some property taxes and all the dynamics that come with just building something from the ground up here. But it was more of a commitment to, we're here for good. We're not an outside entity that comes in an online or digital fashion only and just extracts money from the area, rather than deeply lending or committing and investing through loans and employment in the area. We're here for good. And even more interesting, I know a lot of you might have kind of conversations with your boards of directors, especially if you're looking to build new branches. And a question that I hear often, especially from board members, is what's the ROI on the branch? When do we know that it's going to reach its standalone profitability? And honestly, I don't know the answer to that question. What I do know is it serves as a great marketing tool, especially in this day and age of deeper digital commitment to members. You may have a brand new branch or store that your members drive by 3 times a day, but they end up joining your credit union via the app. So did the branch do its work? I think it did in a marketing sense there transactionally? No, but to some extent it serves as a marketing billboard more than a place to drop in and do transactions. So keep that in mind as you justify the existence or the expansion of your branch footprint there. It's sometimes more of a marketing dynamic than it is serving 5,000 members that happen to live within a particular geographic circle in your neighborhoods there. So that's a generational shift in membership. A good measure that you can start to look at if you're not already is as new members join your credit union, what's the percentage of those new members that are, say, between 25 and 35, maybe 40 years old on the onset there. And the reason I say that is you can be capturing people at a time in their life where they're going to be looking at mortgages, a couple of car loans, maybe they're starting businesses or families, and they're just starting to do a whole lot of adulting, I guess is what you would call it. And why not understand if we're being attractive to that set, because there's 20 and 30 years of potential lifetime value that comes from that group there. So measure it and find some ways, like we see here, to prioritize mobile first, to take a look at products and services that are aligned with their values. We talked a little bit earlier about those eco-conscious consumers with regard to e-loans, solar loans, the local commitment there. A lot of different ways that we can measure who's joining us, but also make sure we're designing the experience that's practical to that 25 to 40-year-old set there. Part of this too is how I refer to this is proactive financial inclusion. We have challenges in all of our communities. Not everyone has the same financial circumstances. Some are doing well and some are just getting started, and there will be those who are struggling. And that I think our credit unions have the opportunity to serve all of our members. However, for those who might be having some challenges out there, or maybe they're new to the financial services marketplace itself, we've got access to serving underserved communities through mobile banking. You can take a wrapped truck or a tablet and a 5G connection, and you've got a branch right there that can go anywhere. I just read an interesting piece in one of the credit union publications last week about Lakota Federal Credit Union on the Lakota tribal reservation in South Dakota, if I recall correctly. Anyway, they've got a van with an ATM and a couple of tablets there, and they take it throughout the reservation. I think once a week is where it pops into various segments of that really broad geographic area, and they love it. It's working well, comes right to them, and they can continue to take service right to the members versus asking the members to come into them all of the time. Microloans, alternative credit scoring, AI tends to work its way into alternative credit scoring methods and models that basically can look outside of, say, a FICO score or a debt to income ratio that we traditionally use for underwriting, and look to the fact that you're making your payments elsewhere. You're paying your Netflix bill on time. You've been paying your rent. You've been employed gainfully for a number of years. And those elements, when you kind of score them in some non-traditional ways, can prove to you this member pays her or his bills, therefore is worthy of some financial inclusion through our credit union. And with that, you build a lot of trust, good education in the communities, as we're not just here for those who have got 20% down for a mortgage. We're here for those who are looking to save their first $1,000 and get that leg up on life, and kind of everyone in between. My question to you is, are you building products, services, and experiences for those who are trying to sort through this messy world of financial services and get a little bit more square on their side? Much of this, as we look to deepen relationships with newer or expanded sets of members, points back down to what we've talked about, data being the way to lead some of our experiences with our members, predictive analytics, next best product and service. I know a lot of your member service representatives and your contact center representatives, as they load member information up in front of them and address the need that the member has in front of them or on the phone with them, there's also a feature that might indicate this member owns this product with us, is probably qualified, or may use another type of product. Here's the next best offer that you might propose to this member. What I like about this is it focuses on just one practical addition, a deepening of a relationship with a member versus trying to go through the whole rigmarole of all of the products and services that you offer. It's difficult. Members stop in to conduct a transaction. They need to get back on to their days. They just don't have time to hear about the entire suite of products and services that you have. However, with member insights that come through data, your frontline leaders can make that recommendation based on patterns, payments, history, information about that member to make that next product recommendation. It also helps us with targeted campaigns. We chatted a lot about that earlier, and even the fact that we can measure member experience in real-time interactions. I'm thinking of a credit union right now that after every transaction in a statistically sampled fashion reaches out to their members and simply asks them, how did we do? And they score that and they refine their experience all along the way without bringing in sort of an outside marketing firm to ask members about their experience. They go directly to the members, they gather that information in real time, they find out where they're knocking it out of the park and where there may be some areas for improvement, and they can fix that on the spot versus waiting 30, 60, 90 days for a consulting report to come back and give them possibly the same information. So member insights can really help you increase service, enhance service, and perhaps fix service shortfalls that happen from time to time right there in real time. Speaking of real time, speed and simplicity is driving what credit unions are building into their member experience and what I see in a lot of strategic plans, whether it's a streamlined digital loan application with instant approvals. Maybe it's account opening with instant verification of identity and funding of that account. I just sat down with an interesting fintech out of New York City just a couple of weeks ago, and they've got it down to a minute. A minute is quickly becoming the new norm to apply for a membership, verify the identity, and fund the membership. And it used to be the days you stopped in on your lunch hour and it took the entire hour. And here we've got the opportunity to, I suppose, be having lunch while you are starting your credit union relationship, verifying your identity, and of course funding it through an ACH or a card mechanism itself. It also helps us make some faster decisions. So if there's something you want to build into your operating or strategic plans, it's just simply ask the question, how can we build more speed and simplicity into our members' experience, but also internally, because that helps us make faster decisions, operate a lot more efficiently, and really just provide more value for the expenses that our members are absorbing with their credit union into their overall credit union success. Speed and simplicity certainly drive a lot of credit unions and their strategic and operating plans, but I kind of come back to the bigger picture. Obviously, we've talked a lot about technology and shifting trends, what members expect, how we're delivering this in a faster, more tech-savvy fashion there, but I come back to why we exist as credit unions, and it's about the cooperative principles. My question to you is are you building this into some of the elements that you put in your marketing, in your communications? Do your members know that they own the credit union? Do they get the coolness of being a people's bank? And I've seen that term from time to time. It's one thing to be a customer of a bank. It's another thing to be an owner. And there's really the value that we have as credit union members is we own the shop. It's ours and get a say in the strategic direction, or at least a vote for the board of directors itself. And really it's done for us. So please highlight that. It's meaningful, it matters, and I think it's a strategic differentiator, especially in light of all the competitive kind of threats and forces that surround us there. We can still be a big meaningful difference, or make a big meaningful difference in financial services. Financial literacy is built into what we do. It is our strength. It's our secret sauce. It's our superpower. The more we help our members get wiser financially, the more they consider us. And you have to think about this in an awareness, a trust, and an ability to market type of fashion. Is when we invest in our members' better understanding or deeper understanding of their own personal or small business circumstances there, we build trust. We help them get better. We help them improve their financial lot in life. And that drives, as a byproduct, additional consideration, if not business, that comes later in their worlds there. And on the practical side, a great example I've seen in credit unions is just showcasing some member success stories. That first car, that first business loan, that helped me out of a jam circumstance there. And this doesn't need to be professionally developed. I encourage you to get a real story with a real video captured on your phone that is posted to your socials and even to your website right away. Because when members see stories like that from, honestly, consumers and members that look and act and sound a lot like them, now it's not a professional actor or actress that's come in and created this great campaign for us. It's someone that I know, the guy in the neighborhood there. It's someone that I know, that I've seen, that relates and resonates with me. And that matters, especially when this challenging aspect of financial services can be a little cumbersome from time to time to understand. You've got real member success stories that just personalize what you are, who you are, as a credit union. A neat credit union down in Georgia that's called Peach State Credit Union. They do exactly this. And interestingly enough, they've been able to trace a lot of their new membership growth from consumers who saw real member stories, and those members looked a lot like them, and that caused them to check out the credit union and eventually join the credit union itself. So some good things there that I encourage you to take advantage of and really drive your identity by reinforcing the purpose of why you exist and what your members expect and value the most in you. All right, let's move through the last 15 minutes or so of our time together, talk about some strategic actions. I think I put some additional material in here for you too with regard to some new KPIs that you might look at. With regard to growth, we've got actions you can take. How about an agile, technology roadmap, where we simply ask ourselves strategically, where do we need to be moving down the road with regard to technology, internally and externally? Are they digital solutions for our members? Are we listening to our members on a regular basis as to how we are serving them through technology and perhaps how we might enhance that experience through technology? And as we've discussed quite a bit already, using partnerships. If you're a $100 million credit union or a $10 billion credit union or something in between, you don't have to do this all on your own. From the right sized credit union to the largest credit union, there are partnerships that exist there that allow us to deliver these types of experiences in ways that our members appreciate and drives continued loyalty. Just yesterday, I was on the phone with the Ironworkers USA Federal Credit Union in Oregon. They are maybe $130 million in assets, a right-sized credit union, but they're growing in a nationwide approach there. And it's because of an agile technology roadmap and realizing that if we're going to serve a broad field of membership like ironworkers across the USA, we had better be prepared to handle the volume that comes in through technology, because we obviously can't be in all of those physical locations around the nation. So build a roadmap based on how your members are using your tech and how you envision them using that technology in the future. Internally, keep on learning. We talk about our member service representatives, our managers, our vice presidents, executives, our boards of directors, of just needing to get better. And I think that's fair, especially if many of you are on the board of directors on this webinar here. It's only fair if we ask our management team to build a robust and innovative and always expanding credit union set, then we need to be growing on our own too. We need to be sharpening our saws as volunteer leaders as well as executives. So keep on educating your employees, emerging technologies and trends, webinars like this, knowledge sharing platforms where you can learn through the Share Insurance Corporation, through the leagues, just a lot of good peer-to-peer learning that exists within the credit union ecosphere. But the last that you'll see on this slide is don't wait a year to try something new. If you feel like there's a good idea, a good piece of technology, a new way of looking at underwriting, a faster process to opening an account, try something. Maybe it's a beta test with just a small set of your members. Maybe it's across the entire membership in a small tested out type of fashion, because sometimes our members won't wait for that experience that they really need and expect. And in today's day and age, you can shift financial institutions literally in the palm of your hand. And gosh, I can go back, and maybe some of you on the call can go back too, where there was a day where, gosh, if you wanted a consumer loan, you went to the credit union. If you wanted a business loan, you went to the bank. And if you wanted a mortgage loan, you went to Savings and Loan Association. And many of you know the S&L industry does not exist anymore. Those three institutions were independent of one another. And today, if I were to ask for a show of hands on the webinar right now, how many of you offer credit cards, car loans, and business loans, I'll bet 3 out of 4 would put their hand up in some fashion, the ability to serve those types of businesses and consumers, and hence the need to just continue to experiment and innovate and be relevant. And because we've got so many elements with regard to competition, and our members able to choose so many different institutions to serve a need that used to be independent. You can also reimagine member engagement and just how you educate, how you engage, how you interact with your members there. It could be personalized touch points when you're online on the mobile device. It hands off from one to another, so the member doesn't stop when they literally press pause from one mobile device to an online application, or vice versa. That makes it very, very personal. Community events to strengthen your relationships and drive loyalty. So we get practical. We've got financial education. We've got sponsorships. We've got chili cook-offs. We've got homeless shelters that we might engage in helping to create and make some or create some supplies for them to distribute to those in the community. So leverage those community events to show that you're just not here as a building with loans and deposits. You're here to make this a better place to live and to work and just to be a part of. And as we've discussed always too, inside your app, inside your online banking, are there ways that your members can play games, can get better, can have fun educating themselves for better financial habits there? So some good strategic actions I've seen at work around the industry. Partnerships are important too. I won't reiterate or reinforce a lot of what we've discussed already, but we can partner with fintechs, we can collaborate with local organizations, engage with a lot of our shared service networks for branches and ATMs. On that middle point there, collaborate with local organizations. I would encourage you, if you haven't already, take a look at other cooperatives in Massachusetts or other states if you have some branches in those states as well. What we've learned through the decades is that members of cooperatives tend to like to do business with other cooperatives. And I would imagine if I put up a list of all types of general cooperatives that are in the state of Massachusetts, obviously financial cooperatives, but I'll bet there will be power co-ops, water co-ops, agriculture co-ops, purchasing co-ops, education co-ops. I've just put together 5 or 6 right there. Those cooperatives have members who love doing business with other cooperatives. Perhaps there's an easier marketing reach to go connect with other co-ops and say, hey, we're all in the cooperative family. Why don't we do some cross marketing of our products and services? You get some members, we get some members, and we all kind of grow this cooperative business together based on our own areas of expertise. That's an easy win with members of co-ops who already like the idea of owning the business that they utilize on a regular basis. The last trend that I share with you here, and then I'll share with you some KPIs that I've seen out there in the industry that are different than the traditional KPIs we might see on a regular basis. All of these trends, all of these strategies and actions that I've shared that credit unions are acting on today, it's all to build strong finances and deep relationships. So you ask the strategic question, what can we do to expand our deposit and loan offerings? I've got some examples there that you might be already utilizing already, or some to consider. How do we personalize everything from marketing to technology to that one-on-one experience with that member service representative or the contact center agent there? Personalize absolutely everything. There's the Amazon effect to the banking services that we offer there, and to some extent reward your members. Now, some of your rewards might just be through continued low rates on loans and increased rates on your dividends, or maybe continued zero to low fee services that you offer. And in some ways that's better than a rewards card if you can prove to your members that you're getting an equal amount of benefit as if we were paying for some rewards program to be maintaining. I'll let you indicate what works best for your members, but it comes back to the point that your members have options in financial services. Are we thanking them personally, but also financially, for choosing us over the wide array of financial products, services, and experiences that they have out there in the member experience and consumer financial services space? As we wrap things up here, I've got 4 or 5 slides, if I'm counting properly here, on some new KPIs for growth that I have seen at work around the industry. Now, obviously, we can look at traditional KPIs for growth: net member growth, assets, loans, deposits, profits. Don't stop measuring those, because that helps us remain safe, sound, and relevant for our members. But here are some new numbers that I've seen credit unions looking at that help them have almost some key predictive indicators of growth. So KPI that we typically read as a key performance indicator, how we did. These are maybe some key predictive indicators as how we will continue to drive those results here. Let me just capture a couple of here, and I'll let you kind of look at these at another time there for a deeper dive there. But 2 that I've seen at work that are driving potential business there. First of all would be the digital engagement rate. Essentially, what percentage or what growing number of our members have downloaded the app or are active users of the app, and can we seek to maintain that growth rate and maybe enhance the app to continue to help members use it? It's great for the member experience, but you think of the administrative costs that come with that maintenance there. It's a lot less to administer that account via an app than it is those face-to-face transactions. Another element that I would share with you would be the financial, wellness participation. That might be those who are playing games, those who have watched videos, those who have sat through some financial counseling, a number of ways to indicate we are investing in our members and gaining their trust. Therefore, we know that this is helping build retention of our members. And when our members stick around longer through retention, we know we have more opportunities to communicate, to personalize our communications, to market to our members because they trust us and they continue to maintain business with us and grow it along the way as the time is right for them. Those are a couple of KPIs for growth. I put a few more together. And again, I'm just going to highlight a few here that I've seen at work quite a bit in the industry. How about remote deposit capture utilization? What percentage, what number of our members are using the app to capture pictures of checks? If they're capturing pictures of checks and uploading them obviously to their accounts, you know that's probably a very tech savvy member. Are you measuring that and continuing to educate members on how they can utilize that, kind of capture and improve their experience there? You might also look at the mobile wallet transaction volume. What percentage, what growing percentage of our members are using their mobile wallets as opposed to the actual physical debit card or credit card? And that helps you get an understanding of how they're engaging with you and perhaps proportionately where the investment in that experience needs to continue to grow there. So a couple there that I've seen at work, a few more KPIs for growth that are busy in the industry itself. There are some new KPIs for growth there. One very interesting here is the social media engagement to membership growth. And there's been some intriguing statistical correlations with growth in your followers on your various social platforms. Perhaps it's Facebook, X, TikTok, Instagram, Reels, Threads. Those are just 5 there that I see really, really active in credit unions. There's a correlation, I should say, with increased engagement with your social media platforms and engagement as well as deeper relationships from your members that parallel that growth rate. Let's pull it back to the practical side. What are we doing to continue to engage, to create more followers, to find ways to work with our members in a social media engagement, which honestly isn't always about sales. Sometimes it's more about just community things we're doing, new features, new partnerships there, cool financial tips there. It's just engagement, but there's a strong positive correlation with membership growth as it relates to social media engagement. How about this third one here? Digital loan application completion rate. Can your members apply, have underwritten, get approved, and even fund a loan, all things being squared away, completely online or completely digital? Where's the stop happen, and how do we take it to the next step? So what we can look at internally there is what's that percentage of our loan applications or our loan application processes there that can be taken all the way from A to Z via a digital feature or function itself. So another good set of KPIs for growth. Got one more slide here and then open it up for whatever questions you might have out there as we get toward the top of the hour, and a couple of more slides that are with the handouts too that you can kind of look at in your own time. I want to be respectful for the time that we've committed to this webinar here. The KPIs and the questions of relevance. The top 4 are the ones I will really encourage you to take a deeper look at or begin to measure if you're not already, of our new members that are growing. And let's not worry about net members right now, because sometimes we just can't control achievements to the state because of 3-year dormancies there, or whatever the state laws might be there in Massachusetts. But of new members, what's the percentage that are ages 25 to 35? And then how are we engaging with that member set? If you have members that are joining you that are 25 years old, they've got 30 years roughly of good financial services ahead of them in that net borrowing age of life. And are we engaging? In West Virginia, just last weekend, I was there. I heard a credit union share with me, pretty decent sized credit union. They went from an average membership age of 56 to 43 in roughly 3.5 years. And after I kind of picked myself up off of the floor, because you know that average membership age is something that just takes forever to work down. It moves in tenths of a basis point sometimes. The answer was we really piled on the numerator, excuse me. We wanted to make sure we were attractive and appealing and marketing to this 25 to 35-year-old set there, because we knew and know that Generation Z, young millennials, are the future to this lifelong relationship we want from them. Because of that, you can start to look at the growth rate of your spend and debit accounts there. What's the percentage of your members that are using your debit account? And are you starting to see increased volume from that? The growth rate of your mobile banking, already pointing toward technology and the use of that. And lastly, we'll open up for any questions here. What's the average member tenure or retention rate at your credit union? In other words, of the members who joined you last year, 1 year ago, what percentage are still members? What about 3 years ago? What about 5 years ago? And you can stretch that out, or you can squeeze that down to really get an understanding of what the retention rate is. We know statistically, and I've got some good things I'll supply to you in some follow-up material here, that the longer your retention rate is, so it goes from 98% of our members have been with us for 5 years or more, as an example, we have more opportunities to market to them. And rather than focusing on just succeeding in the first 90 days of membership, of gathering lots of products and services, start to think more about the long-term relationships, because statistically, and with respect to member lifetime value, it's better to have some of your members' business all of the time, rather than only considering success, a whole lot of business in that first 90 days of account origination and onboarding. So I'll work this week to get some follow-up material to you to really reinforce that point. But I think you'd enjoy seeing that and starting to measure member retention as a tool for lifetime financial value. Okay, Erica, I promised to wrap things up about 5 minutes ahead of time if there are any
Yeah, you're right
questions
on
out there.
time.
Good.
Thanks, Jeff.
You're welcome.
Yeah, there was a question that came through. They said, in your opinion, in relation to Gen Z and the other younger generations, what would you say is the capitalized THE
Yeah.
key trend that is shaping their financial service
Yeah,
expectations?
absolutely.
Is it a
Yeah,
Yep.
I'm sorry.
And then they said, is it AI, automation, digital banking? Do you think there's any one thing that should take
Yeah,
priority?
it's digital banking, and the reason I say digital banking is AI and automation is really built into that digital banking platform itself. So if you're with your board of directors, if you're with your executive team, I think a great question would be, how do we take more of our own business to a digital fashion, especially for Generation Z? They're going to engage with you there first. They'll obviously get in touch with the branch if they need to, but I think, like many of us, they just want to go ahead and kind of take care of their lives in the palms of their hands, and that makes you more relevant, and I'm going to say more meaningful for them too. Eric, I hope that kind of captures the gist of an answer for that question.
Yeah, absolutely.
Good.
Yeah, it's very interesting that your commentary about the 1 minute,
Mm.
like how much everything has changed as far as, like you said, visiting the banks. Actually, we were shooting a commercial a couple of weeks ago, and I was at one of our credit unions, and it was curious to see how many. It's much older generation that is still visiting,
Yep.
going in and doing their actual, their actual banking at their lunch break.
Yep.
That's what we were seeing. I found that really interesting to watch that, like, actual foot traffic,
And what's
but not many young people.
You're right. And what's intriguing about that, some research just a few months ago came out and showed that 70+% of American consumers kind of want to do the bulk of their banking business electronically. That was
Mhm.
across the generations, and that's what stood
Oh,
out to me.
interesting.
So my daughter who's 20 years old loves it. I love it at 57 years old, but I jumped to my
Yeah.
dad who's 81 years old, and man, the guy loves the app at the credit union he's a part of in Colorado Springs. So he's going to use online a little bit more than the app, but I think 71% of consumers expect to do business electronically. It's probably about the same proportion with regard to our members. Still some branch, but more and growing toward the electronic or digital side of banking.
Right. Absolutely.
Yep.
Well, thank you so
You're
much,
welcome.
Jeff, for being here today. I already had a few requests for your
Super.
slide deck and to see the copy of the presentation to share with staff, so I will make sure that's available. We're so happy to have Jeff here with us today. As I said, the recording of today's webinar, that'll be available probably by the end of the week. And then as far as slide deck, if you just send me an email, I'm happy to send that to you. And it has Jeff's information as well. As far as what's coming up, next week we have two webinars. On 13th, on May 13th, it's part two of the two-part series about latest trends and innovations in financial services. And we're going to talk about the future of banking, including generative AI for personal finance. So that will finish up that series. And then on the 15th, we have Jason Huang from the FHLBB. He's going to be talking to us about the economy. The name of the webinar is Navigating Uncertainty, a U.S. economic presentation. So that should be of great interest to our cooperative. There's a lot going on, obviously, and he is going to talk about the U.S. and mass economy, including short-term and long-term challenges for credit unions specifically. And then on June 3rd, we're going to have a presentation about serving the underserved the right way and increasing loan growth and profitability. So keep an eye out. I'm going to continue to add webinars throughout the summer. I'll keep sending those emails that you see. And I thank you all for taking time to be here today. Again, Jeff, thanks so much for being here.
That's a legitimate QR code, by the way. I know I was joking about it earlier, but
oh yes,
that's not quishing right there. It's legit.
So thank you, everyone. Nice to see you. And Jeff, thanks again, and have a great day.
All right,
Take care. Bye-bye.